I had an amazing time on my break from the channel, but I'm back, baby, and I'm feeling better than ever. And you know what else is back and better than ever? Our old friend SCHD. I've said it before and I'll say it again. SCHD is the king of the dividend trifecta, and that's dividend yield, dividend growth rate, and total return. And the total return of SCHD in 2026 has been out of this world. But this video won't even include that run. Even just looking through 2025, the dividend growth and price appreciation alone are enough to make you drool in your sleep. SCHD really is our bond on steroids when it comes to long-term value and long-term cash flow. And today we're adding another year to our legendary retirement scenario. The one that proves, year after year, that SCHD is built different. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. And if you enjoy this content, please rebalance that like button, subscribe if you haven't already, and consider joining the channel membership. It helps keep this section short and sweet. And before we dive in, a quick early shout out to the channel members. You truly are the real ones. I took nearly 2 months off from YouTube, and somehow the channel members grew by 1 member. I'll do the shout outs later in this video like always to give the new people their props, but I just wanted to say that you members are genuinely amazing. And you know what time it is. Let's grow. SCHD Basics and Methodology. SCHD is the Schwab US Dividend Equity ETF, and its purpose is to focus on quality companies with sustainable dividends. SCHD holds 100 companies weighted by market cap and excludes REITs, which I love because it pays 100% juicy qualified dividends. That cash flow receives the same favorable tax treatment as long-term capital gains for all of you 4% rule followers out there. And I want to quickly walk through the SCHD methodology because remember, you're buying the methodology, not the current holdings. And the methodology is what makes SCHD flourish over time. Step number 1 is that we screen for all companies that have paid a dividend for at least 10 consecutive years. And take note, these companies only have to have paid the dividend, not necessarily grown it for each of those 10 years. This single rule alone screens out over 90% of all US companies. And then the companies also need to have a market cap of at least 500 million and an average daily trading volume of 2 million, just to make sure that they're all decent sized, legitimate businesses. And then before we jump into the actual scoring, this next step is one that most investors forget about. SCHD will sort the companies in descending order that have passed the basic screen, and it only keeps the top 50% of the highest yielding companies. The other ones go poof. So in other words, if 500 companies pass that initial screen, then 250 are assessed in the scoring round. And that scoring system equally scores the companies on 4 key metrics. And these are 4 good ones: free cash flow to total debt, return on equity, dividend yield, and the 5-year dividend growth rate. Individual stocks are capped at 4%, and any sector is capped at 25%, and SCHD rebalances on a quarterly basis. And the index composition is reviewed annually to add and drop companies. The 2026 reconstitution already took place. It happens on the 3rd Friday of March each and every year. SCHD has my favorite dividend ETF methodology that I've come across, except of course for the HODL factory, which is the individual stocks that I manage in my portfolio. Most of the other dividend ETFs have 1 or maybe 2 simple screens, and then they just pull in a bunch of companies. SCHD brings in high quality businesses and the dividend growth angle. That's the magic combo. And one last thing, SCHD's managers are not handpicking stocks during the reconstitution. It directly tracks an index, so there are no gut decisions or personal preferences involved by the managers. Enough with the basics. Let's grow already. SCHD Key Metrics. Let me show you why SCHD is the king of the dividend ETFs. We've pulled up SCHD out here on Seeking Alpha, and Seeking Alpha is my favorite spot to research stocks and ETFs. It's my portfolio aggregator where I run my screens and everything. I absolutely love it. If you want to try Seeking Alpha Premium for free, I do have a link pinned in the comments below. And the first key metric we should point out here is that SCHD closed the day at $31.69 nice dollars per share. And you can see I'm recording this market close on 5/8/2026. So SCHD has been roaring this year. It's up above 30, which is just wild after the last couple flat years. We knew it was a matter of time though, right, squad? And then one of the juicy key metrics about SCHD will always be the razor thin expense ratio at 6 basis points. This works this amazing methodology while keeping almost all the money directly in your pocket. And then the fund assets under management has ballooned to $90 billion, which is up a solid $20 billion compared to last year when I dropped this video. This thing has really taken off. But now let's get into the good stuff. For the holdings breakdown, after the reconstitution that took place a couple months ago now at this point, you can see that no single sector is really having a huge run up. We have healthcare leading the charge at 18.5%, consumer defensive at 18, technology up to 16, energy down to 16. It was over 20 last reconstitution. Financials at 9%. And then industrials, they're at 8. Consumer cyclical at 8. And communication at 6. It's a well-balanced fund by sector. And scrolling down to the top 10 holdings, you can see that we have had some run-ups here since the rebalance. And we have one at 5.5%, Texas Instruments. And then United Health Group has stormed up to 5%. Qualcomm and Chevron are also over 4% each, but this will be rebalanced quarterly back to 4% per holding. And you can see that the top 10 names, and these are all big names, we won't read them all off, but they're at 42% of the fund. So it's a bit top heavy, but less so than a lot of index funds that track the market by market cap. And it has 105 total holdings. Okay, it's time for the big leagues. You know, we got through that first part, but now we're to the fun tab, and that is the dividends tab here. And by default, Seeking Alpha will take us to the dividend scorecard, and I love this information here. You can see that SCHD's yield is down to 3.33%. With the price run up, that makes sense. We were sniffing 4% for a while. And then looking at the dividend CAGRs, the 3-year compound annual growth rate is 6.25%, little low. The 5-year CAGR is 9%, and the 10-year dividend growth is at 10.5%. So this has dropped a little bit. A lot of the ETFs have, frankly, for dividends. I have a spreadsheet that many of you know that tracks them all, but SCHD is still very solid at over 10%, and it's been around for 14 years. Therefore, it's paid a dividend for 14 years, and you all know the next part. It has increased its dividend each and every year it exists. If you have a set amount of SCHD shares, you have never once in its history been paid fewer dollars than you were the year before. And I think we did this last year too. This seems very familiar, but we're going to use that rule of 72, and we're going to take 72 divided by 10.43, and that's that 10-year CAGR. What this tells us right here, oh, very nice. Look at that. Every 6.9 years, your cash flow, the dividends received, will double for just holding SCHD and not adding a single share. In other words, if you're receiving $1,000 per quarter, in 6.9 years, you will receive $2,000 per quarter. And that's if you're spending each and every one of those dollars. Seems unrealistic, but wait till you see the retirement scenario. It's even a little better in reality. And now, it's time to ride into the sunset. Retire with SCHD. It's time to add yet another year to our retirement scenario that we've been updating for years. In this setup, our retired couple started with $1 million to invest alongside their cash position. We kept things simple for this one. $500,000 went into low-cost market tracking ETFs, and the other $500,000 went directly into SCHD. In this video, we're following the SCHD portion. And honestly, after seeing how powerful this combination of dividend yield and dividend growth becomes over time, I wouldn't call you crazy for going 100% SCHD in retirement. I've pulled up the Retire with SCHD spreadsheet, and you can see here that Jack and Jill retired on 1/1/2013. So at the end of 2012, they hung them up and called it quits. At the very beginning of 2013, that's when they put their $500,000 directly into SCHD. And now you can see that as split adjusted was $9.45 per share. And that picked them up a split adjusted. It had a 3-for-1 split. 52,929 shares. Let's tackle this thing year by year. And just a quick note, 2012 is here just for metric information. So you can see this total cash flow, for example, does not include this 14,000. This is just here to calculate other CAGRs and everything. So we really start here on 2013. So at the year end, your shares already appreciated to 12.22, and you can see year by year, this is price alone. You drop there from 14 to 15, the price went down, and we're just going to go down. I won't read them all, but year by year, you can see that the price has slowly but surely appreciated all the way up to 27.43 a share. So it tripled from 2013, the end of 2012, so the beginning of 2013 to the end of 2025, these are year-end prices, you've tripled your price compared to what you paid. And that dividend paid per year, this is where that dividend growth comes in. Each share of SCHD earned you 27 cents per year. I know it sounds comically low, but you'll see how it adds up as of 2012. So the first full year of owning SCHD, we got 30 cents per share with those 52,929. Remember, this does not change. These dividends are not being reinvested. We're spending all this cash and having fun and living life. So all these metrics we're seeing here is without drip on. That's what makes it so staggering. These 52,929 shares, that $500,000 investment is all you ever put. Not an extra penny went in on this thing. And you can see that you go from 30 cents to 35 to 38 and so on and so forth, all the way to $1.05 per share. So you over tripled your per share dividend, and you can see that play out. You went from 16,000 a year to 55,000 a year. Those are the exact same shares. You didn't lift a finger, and now your spending gets to ramp up by this much with this portion, this 500,000 of your retirement portfolio. But here's the kicker. The dividend growth is incredible. The cash flow has over tripled, which is just amazing. It's almost quadrupled, actually. It's going too soon. And remember, this doesn't even consider that we're at 31 something right now. This is just through 2025 when SCHD still quote unquote suck. But you have your $500,000 has actually turned in to a portfolio value of $1,452,000. Again, without reinvesting in dividends, those same shares. And that's a return of nearly $1 million on price alone. And then you've also received and spent and enjoyed or reinvested elsewhere $432,000 of dividends from 2013 through 2025. So you're almost $500,000. You've almost made up your entire investment in a fairly short time period in dividends alone. That total return is nearly $1.4 million. Not too bad for not lifting a finger. And that's why I caution you, when you see a yield of 3 or 4%, and it's not a yield max 90%er, and people are saying it's trash and it doesn't add up, just remember the power of compound works not only with price, but also with dividend growth if you have the right methodology and fund structure. And when you add that together, it gets these weird outlier results over time. The only rule you have to understand with compounding is to not interrupt it. It's it. That's it. It's that simple to have a portfolio like this over the years as time plays out. So I guess I'll conclude by saying to all the haters, you should check out the Seeking Alpha comments over the last 5 years before this boom. No, SCHD is not broken. Everything's working as intended. Enjoy retirement. Time to move into the section that I added because of your feedback from the first video about retiring on SCHD. SCHD returns with drip. We typically would be living on most of our cash flow in retirement, but I'm here to give the people what they want. This is what it looks like when you reinvest those sweet SCHD dividends and have other assets to live on. I'm out here on Portfolio Visualizer, which is my favorite site to run these back tests. It is extremely expensive. For the paid version, I do it strictly for YouTube, but the free version does give you a 10-year look back at whatever you want to look at. So I prefer to have the real thing, but it's $360 a year. That's just way too much, in my opinion, for a random user. I would not purchase this without my YouTube channel, as much as I do enjoy the information. But moving on to our scenario here, it's a very simple one. You can see we have SCHD in portfolio 1. And then asset 1 is 100% right here. And then for the settings, I have from 2012 through 2025, we're beginning with that $500,000. No cash flows. In other words, we're not contributing anything. So it's just that $500,000 that we initially invested. Rebalance doesn't matter because there's only one fund. But the reinvest dividends in this case is on. That's so we can see how this thing compounds if you reinvest in SCHD each time it pays. And display income is on. So we are going to hit Analyze Portfolio. And we can see right here that we are indeed pulling from January 2012 through December 2025. So this thing is missing 16% and change of total return. Just keep that in mind as we view these numbers. I love to start here with the performance summary. And you can see here that starting balance was 500,000. Our ending balance with dividends reinvested, so we're no longer spending that money like the spreadsheet from before, $2,455,000. Think that plus 16%, and I'll see you in 2026. And that had a CAGR of over 12%. That's very solid over a long time. Very low, much lower than the market standard deviation, which is one of the superpowers here, of 13.5%. We had a best year of 33. Worst year, this is probably the most impressive stat, negative 5.5%, whereas VU, the SP 500, was down 18% in 2022 alone. And QQQM and VGT were down just over 30% in that year. So again, the purpose is to stabilize your equities, not necessarily to go to the moon when things are good. And for more on that, you can see the portfolio growth. You start here at the 500,000, and as you go along, you can see it's pretty steady growth. It's a nasty fall here in 2020. That was the pandemic. And then in 2022, you can see we were way up here at 2 million and we dropped all the way back down to 1.75, but then back up, and you have some roller coasters here and there, but compared to the market, these are very tame roller coasters, and you slowly work your way up to 2.4 million, which is going to be closer to upper twos as of right now, I believe, if we did add 2026. And on the annual returns here, this is a nice clean way to see it. You have some spike years that are great, but more importantly, you have basically a flat year here in 15. You were down 5.5% in 18. And in that horrible year, you were actually only down 3%. So that is where the low standard deviation kicks in, and you protect your value in those down markets. SCHD has a tendency via its methodology, so it's all systematic, it's no gut decisions, of buying low and selling high, which is a good thing. People oftentimes get angry when it loses sexy positions that are going to the moon, but that's sort of the point. It's taking profits, quote unquote, and buying more beat up value, and it just works over time. And the last thing I'll point out here is you can see it's been pretty rough. You know, the last few years, and you've heard how bad SCHD is and might as well do bonds or CDs, but it's like, well, I wouldn't recommend that because it's still having some pretty positive returns in those down years. And for its trailing returns, I like to just look at annualized return. So over the full duration here, we're at that 12%. Over the last 10 years, we're 11.5%. And then for the 5 years, we're at 9%. 3 years, that's been struggling a little, but it's still up nearly 7%. I would take that any day of the week. And then on the last year, it's been a low 4.33. But we all know the last year, as we saw earlier, is actually up 27% as of right now when I'm recording. So this is not favorable, which I like because it shows how great it is even in its worst stretches. Okay, I highly recommend that you grab your socks and make sure to hold on to them because they might fall off in this section. You can see that the portfolio income in your first year in this scenario, we were at about $17,951. And now these numbers will slightly vary as we go on from the spreadsheet, of course, because we are reinvesting dividends, remember. And also, just as a side note, I do compare my spreadsheet to Portfolio Visualizer with reinvestments off when I fill in mine to make sure I make no mistakes. So the spreadsheets were no assumptions. That's exactly what's happened in the last decade plus. But on this one, we go from 18,000 to 21,000, reinvesting those dividends. So you're also gaining shares, up to 24, it never feels like it's doing much, 27. Then all of a sudden you're at 30,000 a year. That makes you feel pretty good. And then 33, we're jumping up to 41. Okay, how about 50,000? Sure, I'll take it in 2020. And then we're up to 57,000. All of a sudden, this compound effect, the nominal numbers going up and then adding the same percentage is what we call compound, ladies and gentlemen. And it's just sort of going ham. 67,000 a year? No, I'd take 71.9. No, you can have that actually. Let's go ahead and do 83.7K a year. And this was our final figure last year in the video. I double checked real quick just to make sure Portfolio Visualizer staying consistent. And it was correct to the dollar. But now, a year later, we are up to $91,500 a year with dividends reinvested. And remember, that's worth $2.4 million. This is with the, I say in quotes, poor performing SCHD. Haters in the building. 2025 was a pretty chill year for SCHD, but this thing has gone ham so far in 2026. We never know exactly what the market will do, but we do know that the cash flow will keep growing every single year. That's just what SCHD does. I'll see all you SCHD holders again next year to celebrate another year of juicy cash flows and the price boom of 2026. And speaking of celebrations, a huge shout out to all you members. I leave you stranded for 2 months and yet you hang around, support the channel, and I somehow have 6, yeah, that's right, 6 new channel members. Thank you so much to Ancient, Scott, Michael, Spalding, Siri, and Gaurav. I really appreciate the support from you 6 new members, and especially the ones that stuck around for a month or so with 0 new content. It means a ton to me, and I promise you, all these wonderful members that you see on the screen now are a big part of what keeps me pumping out these videos. So thank you so much, and I hope you enjoy your early access to the videos, access to my email, and just the general good vibes of supporting. I don't paywall content, so it is just supporting by choice. I want to give the masses everything, but your extra level of support truly is appreciated. And I've said this before in the past, I've made $0.00 from sponsors. That's a true stat. I've never taken a sponsor. But I do have a couple affiliate links that I really do use personally and believe in. And if you want to save money on them and use them and find value, you can do the free trial. If you don't like it, cancel it. But if you go with it, you'll save a few bucks and you'll help support the channel. And that's with Seeking Alpha and Snowball Analytics. Links in the description below. All right, now that we got all that out of the way, check out one of these 2 videos to continue down your path towards financial freedom. Remember, money is overrated. Freedom is not. Thanks for watching, everyone. It's been awesome being back to the channel, and I look forward to seeing you in the next one. Peace.